Hey, what's up, everybody? Today we are up $3,913 in the $1,000 account challenge account. Pretty wild. Normal day that started off, and I wound up taking a risky trade at the end of day to put me over the edge. So we'll talk about all three trades that I took, and we're going to begin with number one, Netflix long. I need to go to the watch list, though. Day trade watch list. Watch list for the day, Netflix, long idea above 325. Okay, so we'll go to Netflix. We are going to move to the 5-minute time frame, 5-day, 5-minute time frame, and let's talk about the setup here. When we ran the Zoom meeting this morning in the Discord server, what I said was Netflix is creating lower highs as well as higher lows, and it's to that point. And I said directionally, we are either going to get a breakout or a breakdown from this, hopefully today, right? And typically what happens when you get a pennant pattern like this or a triangle pattern and it gets to that point, the stock usually does make a directional decision. So today that directional decision was up. Again, we had the long idea above $325. The reason why is because, well, if Netflix made higher highs, it's breaking out. Otherwise, if it was making lower lows, short idea below 320, it was breaking down. So Netflix decided to break out today. So we're going to move this to the 1-minute time frame, and let's talk about the trade that came out. In the alert room, I'm going to scroll up because everything here was mentioned and time-stamped. Scroll up to the very top. Loaded Netflix long. So 9:42 a.m., right? 9:42 a.m., loaded Netflix long, and I give you the contracts. No entry just yet, but I'm about to take it. So let's timestamp that. 9:41, 9:42, right here as it was coming down. I was very close to taking the entry long right here, but I hesitated and waited a bit to see if we were going to get the dip down a little lower, closer to 325. And sure enough, this high of day sold off. We got the dip down, and I saw this candle start to print green. So 9:47 a.m., took entry, Netflix long. I give you the contracts. I give you the fill price. I give you the stop loss. By waiting and staying patient like this and entering as close to the trigger level as possible, that gives us a really small amount of risk, right? So rather than risking from this candle all the way down to 325, we're only risking from basically the bottom of this candle down to 325. So we enter long here, and I'm not going to lie, I paper-handed this position. I went in with about $5,000 capital and sold as we got the high of day move up here for 20%. Why would I do that? Well, for one, I'm a base hit trader. Two, I tend to always take some profits at 20%. And three, I trade using different strategies. High of day this is where we were at, is always going to be a likely point of resistance. And we saw a rejection right there, just a couple minutes prior. So I wanted to lock in what I had. I was already up $1,000 on this trade, so I went ahead and took the profits. And it was a mistake, right? The stock ran all the way up to 332. We talked about this in the pre-market. I said Netflix had room to run to 330, and I probably should have considered scaling out of this trade, but it is what it is, so we're happy with the profits there. So Netflix, walking you through it, right? Now 20%. Here's the contracts, entry price, exit price, can take profits there or hold, but I closed there. And I say that's textbook. This is a trade that totally embodies the way and style and teachings that I talk about inside of my Discord server. If we're just trading strictly off the watch list, we trade the stocks that break the watch list trigger levels. Netflix long above 325. We don't chase the move up. We wait for the dip entry to take the stock long. And that's exactly what we did, and we get the move back up. We got beautiful follow through here. Well done, right? Trade number two was on SPY. So this one not as textbook. And it's okay to take non-textbook trades so long as you're able to read intraday price action. So SPY today off the day trade watch list was a short idea below 41150, which I have a trend line drawn at 41150. It's way down here, right? Where do we wind up taking our short position though? Over here. Why? Well, what happened? SPY opened up and drops below the PDC, rallies up, and then drops down officially below the PDC, previous day's closing price, right here, that green line, into the low of day. So that's already showing weakness. Understanding that old support, which is here, can become new resistance. We'll draw a trend line across that. It looks something like this, roughly. Over here, that's what we that's how we can identify if a stock is trending either up or down, right? Each prior support should act as new resistance, or each prior resistance should act as new support on the way back up. In this case, old support turns into new resistance. Then we coupled this with the fact that the previous day's closing price is just overhead. So that's also another potential point of resistance. So 2 confirmations there. 3, we waited till we got a break of this uptrend trend line on SPY, and we're on the 1 minute time frame here. Waited till we got a break of that uptrend trend line on SPY to take our short position here for the move down into the low of day. So we'll walk you through that one, right? Back to the alert room, SPY, and I give you the chart here before it even starts to reject. And I said, right now I'm currently watching SPY for a rejection at the PDC. If we get a move down, we can look to take this short. So I give you the chart. This is what I'm looking for. Break of the uptrend trend line. That's called the trend line break strategy. I've made a YouTube video on this. If you haven't seen it yet, go watch it. SPY, give you the contracts that I loaded, and then 1 minute later, 10:07 a.m., took entry, SPY short, small size here. And what I did was I wound up using about half of the amount of capital that I used on the previous trade just to mitigate risk. The reason why I did that is because we did not have confirmation that it was breaking the trigger level, right? The stock is still trading up here above the short trigger, which is way down here. So just to mitigate risk and not risk giving back all of my profits from the previous Netflix trade, go in with half size. Take the short position right there, 10:07 a.m. We get the drop down into the low of day, and then I sold the position there. Price target 160, about 19%, 10:09 a.m. Let's see here. Oh, that was actually, sorry, it was here that said. Oh no, I said OCO bracket set. Now up 15%. There we go, 10:12. Yeah, okay, so I thought I was right. 10:12. Close the position there down into the low of day. I thought for a second, I was like, no, I don't know if I closed there or not. But yeah, so we get to move down into the low of day. So again, why would I close there? 2 things. Number 1, I'm a profit target trader. I'm a base hit trader. I aim for 20% profits, about a 10% stop. Try to keep that risk to reward in check on most trades. In this scenario, you saw I had the OCO bracket set, 7% stop loss here with a 19% gain up top. That is that 2-to-1 ratio there working out, over a 2-to-1 ratio working out, reward to risk. Also, we know what high of day and low of day tend to act as natural points of support and resistance. So look at what happened here. When SPY came down, yeah, we could have held through and maybe made a little more profit, but we would have had to hold through this coming back up on us as well. So in this scenario, it actually paid to take all of the profits at the low of day. Whereas on Netflix, it didn't pay to take all of the profits at high of day. We could have probably scaled out of that trade. So it's tough to gauge if you should take your profits all at once at low of day and high of day, or if you should scale out. That is a very sensitive subject that I think you just kind of have to figure out on your own what works best for you. But if you trade long enough, you kind of just realize like you're always going to miss opportunity, and it's really rare for us as retail traders to get the perfect trade, to get the perfect entry, to get the perfect exit. Okay, so that's 2 trades. We were up about $1,400 on the day. Let me go to the challenge account. About $1,400 on the day on those 2 trades, right? Remember I said I traded with half size on the SPY short. So I was done for the day. Then this is where the money came in, and this is also where the risky trade came in, SPX. I made a bad judgment call here and decided to take SPX short, and I made 2,500 on it, but a bad judgment call nonetheless. And here's the reasoning behind that. SPX, 5-minute time frame, all day long has been moving sideways. We see resistance up here at 41.40 at the open. We see resistance in this area, resistance in this area, resistance in this area. Again, 41.40, 41.40, 41.40. And then we get the big volume drop down. You don't see the volume here on SPX, but on SPY, the volume was there. So the volume drop typically tells you it's a news catalyst, right? And oftentimes what happens, I'm moving this back to the 1-minute time frame. Oftentimes what happens when you get a larger volume drop down like this is that the next rally up gets sold and it curls back over and comes down. That did not happen. in this case. And this is why it was a risky trade, because it rallied all the way back up, not only back up to recoup this drop, but all the way back up into the high of day. So my thought process here for taking this trade, I was thinking this rally is extended, kind of ridiculous, right? And I think it's going to hit high of day, fake out, and turn around. And it did do something similar to that. And what I mentioned in the alert room was this, taking SPX short here, 2:47 p.m., which is, as we're getting the high of day move. Taking SPX short, small size, 210. Be careful with this. If you follow, this can be a risky trade here. And then the very next minute, I already said I'm about to close this out, right? You may not want to follow this trade idea. So right away, I knew it was a risky trade. I knew for sure that it was. Then I just giving you an update, still in and holding, Theta by taking the same day expiration contracts. Theta was really eating my premium. And we kind of got a miracle candle right here, this larger drop down, which caused the contracts to spike in price. I think they spiked 40 or 50% in price in this 1 minute. And that's where I closed out, right? Just got to take advantage of the pop like that. However, during this trade at one point, I think I was down close to $3,000. And, I say that the risk was managed. In a way, it was managed because I was already up. If I go back to the challenge, I was already up $1,400 on the day. So I would have only taken a $1,500 loss. And, I can make that back in a day or two, given the profits that I've recently had, the trades that I've recently had. Plus, the account challenge is up so much already. I'm coming off of a 9-trade win streak. To me, that was managed risk, but nonetheless, it should not have been a trade that was taken with the same day contracts. And for that, I think I owe everybody in the Discord server an apology, because the challenge account is strictly supposed to be trades that are taken off of the watch list following the watch list rules. This trade was not on the watch list. There were no rules here that were being followed. It was just intuition for me. It was just, I guess if you've been around the block long enough, you know that, the market plays games sometimes, and they want to break it above high of day, fake out the bulls, trap the bulls, and then bring it back down. I was looking for that power hour sell, which we partially got. But, I just shouldn't have taken the trade. At least, if I was going to take the trade, I should not have taken it in the challenge account. So for that, I do apologize. And, I hope that anybody that followed me into this trade did do what I said, when I mentioned it initially, which was be careful with this. If you follow, this can be risky. Trade using small size. Okay, so that is it. Press that like button for me if the videos helped you out. Thank you for watching. Thank you for your time. We are up above the PDT rule here, $27,000 in the challenge account, day number 76 of the $1,000 account challenge. I think after a day like today, I probably size down tomorrow. Anyways, should I stop the challenge here, or should I keep going? You all let me know in the comments below. Take a vote. I'm curious to know what everybody thinks. Again, thank you for your time. Take care, and I will see you all in chat. Peace.